Just gonna ask you, hey, what do you think?
What do I think? That's gonna be the new show.
Yeah.
What do you think?
What does Anthony think? Oh, here we are. Welcome to Freightonomics, where we discuss what's going on in the freight world and combine that with the macroeconomics. And also, we're going to discuss what Anthony thinks.
Yes, because inquiring minds want to know.
Right. And, for those of you new to the show, we typically, break down what's going on, what's the most relevant topics in the transportation space first in terms of stories of the day, and then we go into specific topics in more detail, breaking those down. But first off, Anthony Smith, I believe we need to thank our sponsor.
You've got to thank some people. Should I thank them?
You can thank them.
I'm going to thank them.
All right.
Because they're an important part of the show. Thanks to our sponsor at Amazon Freight. Amazon Freight, who knows you need more than any other truckload service provider. You need a partner that can help you navigate the world of logistics and plan for the future. Amazon Freight is helping shippers move their freight simply and reliably, while backed by the innovation and expertise that is the DNA of Amazon. Whether you have a few truckloads or have thousands to fill to move, Amazon Freight is your partner for the road ahead. Visit freight.amazon.com to get started. Freight.amazon.com to get started. So
Freight.amazon.com. It's the reverse of their name.
I want to say Amazon Freight, but it's freight.amazon.com, but we are very thankful for them.
Yes, thankful, because it's about to be Thanksgiving, and you know what that means.
I see what you did there.
You know what that means.
What's
you know
that?
what Thanksgiving means.
Turkeys?
If
I ate meat, that would be my meat of choice.
Yeah, that's crazy. No, it means that it's going to be closer to holiday peak retail season in the transportation space.
But it's kind of creeped forward, right? Mm-hmm. With Amazon Prime Day being so far early in October, Black Friday deals really kind of ramping up throughout the month. And now don't we have like produce season kind of around the corner as well?
Well, there's certain produce
areas.
Seasons, but to your point, we've kind of had this expanded peak. Mm-hmm. It started back in September. We saw our tender rejection rates and spot market rates expand wildly throughout August, July. We saw the freight market really recover quickly. Supply chains have been strained all over the world. One of the topics of today is one of the stories written by Greg Miller about the price of boxes, the containers, is skyrocketed here the last bit because they have not been able to secure enough boxes in China to ship all the freight across the world. And a lot of that has to do with imbalance of the boxes. You have a lot of surging demand here in the United States where, consumers have been spending more money than we thought that they would.
Yeah.
A lot of consumers are also buying new things. Home improvement. The American way. But other than that, since September 1st, we are in this expanded peak period. And the big question is going to be what's about to happen here around Thanksgiving leading into Christmas. We normally see spot market rates increase anywhere from 10 to 25%, depending on the season. And the unexpected volatility, if you will. Now, this year is going to be a little different, Anthony.
What's happening?
This year's a little different because we already have an extremely tight marketplace.
We do.
And we measure tender rejection rates here at FreightWaves. Mm-hmm. And I was talking about this a little bit on our midday market update earlier in the week about how tender rejection rates are good measures of, overall like carrier sentiment, what's the capacity looking like in relation to what it was in the previous year, previous month, previous week, et cetera. The more carriers reject tenders or load requests from their shippers, that's a rejection of the rate that they're offered at, as well as the availability of their truck. They're not allowing them to use their space.
They have options.
Or they can't do it. And normally around this time of year, they can't do it.
Yeah.
And that's because, drivers come off, they go in a home time, but carriers also put these artificial boundaries, mileage boundaries around, a lot of the trucks and drivers, so they make sure that they get them home, because one of the big things that we've talked about this year, driver retention, driver recruiting.
Yeah.
If you get a driver, you got to hold on to them.
That's a big part too. Not just that the markets have been tight, capacity has been tight, but now we're going to have fewer drivers available because they want to be home with their families.
Yeah. So supply side is normally the story around Thanksgiving and Christmas. This period of time, everybody, I worked in the space for years, and everybody just assumed that it was because of surging demand, because everybody's buying Christmas presents, et cetera. Actually, most of those Christmas presents had already been moved into DCs and warehouses. Why we see, all this maritime shipment, they have our good friend Henry Byers, market expert.
Heard of him?
Yeah. Mike Bodendistel, our rail expert, talk about how maritime and rail peak seasons happen from late August into sometime in October typically.
Yeah.
And it starts to fall off. Well, they've been ramped up year over year. Import shipments have been going haywire. We're up like 5 to 10% for the last couple of months. The ports of Los Angeles, Long Beach have been overwhelmed. As I mentioned earlier, containers, shippers, normally have to, they don't normally have to struggle to get freight filled in the box like they are right now because these boxes, these containers are just not available.
Yeah.
So there's tons of freight sitting in China that can't get loaded onto a container because they don't have it. Greg Miller writes about this this week and basically says, our containers, the new gold amid black swan. I mean, this is actually an extremely intriguing article to me because, I worked in freight, like domestic freight for years.
Yeah.
Greg Miller has been in the maritime space. And we were talking a little bit earlier about to me, this sounds a lot like trucking in the United States.
Yeah.
What we saw in 2018, everybody was trying to find capacity on their trucks. They're on trucks, they couldn't get it. All these carriers went out and bought at a premium Class 8 tractors. And they were able to fill them relatively quickly. And then we all know what happened in 2019. Demand softened slightly. But more importantly, carriers increased their capacity, their size. And also we saw a huge influx of carriers and increasing carrier in the small market. Can't speak currently. But a lot of the small carriers came on, owner ops came out of the smaller fleets, et cetera, and it's kind of a cycle that goes on. Then we saw that capacity come out of the market. Now, is the same thing going to happen here, Anthony? Are we going to see these boxes that these maritime shippers, because normally the carriers, the ocean carriers, purchase these boxes or lease them from these providers, and now they're paying a premium just to fill up the gap.
Yeah.
What do you think?
Well, I think, Zach, since you've asked, I think that from what I've noticed from trends within freight and transportation, because there's always been a lag, I feel like, within transportation. When we see activity ramping up, companies really kind of build out their fleets, or they really kind of try to ramp up hiring, but then they get all these things in place and it's a little bit too late and they can't really quite capitalize. And then since they've built up, their markets change. And so it'll be interesting to see if this lasts long enough for those changes that they make in their fleet to be recognized and actually utilized, because it seems like there's a ramp up in activity. Hey guys, let's ramp up our fleets. Let's ramp up our workforce. Okay, activity dies down. Okay, we have too much. And now we have this pandemic situation, which no one really knows how long it's going to last or what's going to be really impacted. So I think there's always a bit of a delay. And I think that could be really kind of trickling from larger players in the market that can really control what's happening on their end, and then some of the smaller mid-size kind of fill the gaps there. But I think there's always a little bit of a slight lag.
Yeah, and it's interesting too because the ocean shippers, all the big carriers, the big three, they have the Alliance, 3M, then you have Maersk, all that. I'm not a maritime guy, but we have all those major shippers, and they control most of the capacity. They figured out how to control the ship's capacity, but now it looks like they're not necessarily in control of their box capacity, which has become, another added aspect of things, because as we all know, as a transportation provider, you get all this surging demand and you have to go out and spend this money that you've just gotten on something that can haul this freight that will last forever.
Yeah.
Well, now, because it does make a lot of short-term sense to go out and buy these boxes, they're going out and buying them. Now, here's an interesting quote from this article, and I'll read it. And it was from Hapag-Lloyd, maritime carrier there, and they are basically the agricultural shippers in the United States are complaining because they're not getting capacity. Hapag-Lloyd's sending these empty boxes back over to China because they need the capacity over there, and people are paying such a premium on the imports coming from China, or exports going from China, depending on how you look at it.
Yeah.
That it doesn't make sense for them to export the agricultural goods.
Yeah.
So it's basically a tender rejection for a maritime carrier.
Yeah. Yeah.
and what the spokesperson told FreightWaves in Greg Miller's article is, we continue to serve the agricultural exporters in the U.S. Due to some significant supply chain bottlenecks, we have temporarily reduced our export volume. This is primarily impacting a business that consumes excessive container days at origin and destination. This is kind of reminiscent of how freight treats the agricultural, or it's more traditional in the food warehouses where you have significant delays at the origins. It takes a few days. A lot of times it takes half a day to get loaded at a lot of these food warehouses, because there's a lot of regulation and things around food that are required that aren't necessarily there for your dry van goods. So it's interesting to me that this exists for the container side as well. So basically they're saying, we're not going to wait to get these containers loaded because you're paying such cheap rates. It actually makes more sense for just us to get these containers back to your place to China as fast as possible.
Yeah.
To get a premium on it. And that is exactly what happens when tender rejections go up.
Right. Yeah. Yeah.
That's exactly what's happening right now. And so coming full circle back to my point I was going to make earlier with Thanksgiving is that a lot of what we're seeing with these elevated tender rejection rates being around 26% at the moment, a lot of that is simply carriers saying, I have a better option. Mm-hmm. And it's not what we traditionally see, which is I'm going to go and service. I don't have a truck that can service your freight right now.
Gotcha.
And it's fascinating to me to see this unfold on a global scale versus just your simple. And the big question around this, Anthony Smith, is, we have these bottlenecks on this, sitting out over there across the ocean. Do you think that this is going to have a negative or positive impact on the domestic freight market or economy even?
I think it definitely could have an impact on the economy, because we're looking at for instance, the producer price index. When we're seeing in times of a good economy, we have the producers have a little bit more availability to increase their prices. If things are a little bit more expensive to pull in and the economy is doing well, they'll pass that hit on to the consumer because they can take that hit. Now, in times of not so good economic trends or cycles, recessions, things like that, they'll take that hit because they don't want to shrink their potential size of the consumers that they're serving to. So hey, maybe I'll keep my demographic. Maybe I'll keep these available consumers to purchase from. So I think in the long term, or in the short term, near term, since it's such a tricky spot with COVID-19 times, they might try to take that hit just to kind of maintain their pricing right now domestically. So I think there could be some macroeconomic impacts on it if it's getting a little bit more pricey to kind of get goods over here for overseas.
Right. So yeah, it's getting a lot more expensive, but it's also hurting our economy because they can't export these goods. I don't know if we have this, obviously we have some predetermined agreements with these countries to purchase a certain amount of our agricultural goods without breaking down those trade agreements. But if they're not purchasing those, that's less money coming into the United States.
Yeah.
So to me, that's kind of increasing the imbalance between Asia specifically and the United States, which in the big news this week, a lot of Asian countries came together and developed a trade agreement.
Yeah.
What do you think about that?
I think that's going to be a more common thing, especially as we saw with the Brexit. I think this is one of the things I remember being at a roundtable with a few other wise economists, was that there's going to be, I think, a lot more potential trade deals or smaller trade agreements that pop up, whether it be in Europe or some kind of Mediterranean trade deal or something like that, that will really kind of...
Is this kind of like what NAFTA was? Just kind of a region getting together, and basically saying, okay, we're going to give discounts for us to basically say, all right, you use my goods, I'll use your goods. We're going to discount, kind of have a trade coalition, if you will. And that kind of, I mean, obviously it's beneficial to us and a lot of people in the region because you can source cheaper. And you get discounts on those type of goods. But if you're not producing the things you need, there's not a lot of electronics being developed in Mexico right now.
Right, you build up that dependency, and then are you really executing on your absolute advantage or domestically? And so I think there's a few other things that was tied in NAFTA that folks weren't too happy about, for sure. So now we have USMCA that's kind of underway, which I wonder if we'll have any more modifications come January with that. So but yeah, I think when we're looking at any kind of trade agreement deal, I think you can really kind of ease into more market efficiencies when you're like opening up trade agreements. Now you're allowing certain countries or certain companies to produce what they're good at, what they're efficient at, and you open up to competition. I understand why some countries want to protect their local producers, their farmers, things like that.
Kind of like what we've done.
But those programs I think we've talked about it before. Once you put those kind of programs in place, they're hard to take back. And it's just like you put in certain subsidies, you can't take those away. It's just...
So do you think that this agreement, this Asian agreement, is beneficial or harmful to the United States economy, or neither?
I think it might put pressure on the United States economy, and I think pressure is good because now it forces the U.S. to find more efficient trade agreements, and I think that efficiency is going to really kind of push towards whether it be more domestic, lucrative domestic deals for local producers or domestic producers. I think that is going to really kind of push the needle forward. So I'm all for it, and I think if you kind of put pressure on the U.S., somehow, somewhere, they're going to find a way, as history has shown so far, to kind of really kind of answer that call. So I think there could be good pressure on the U.S. in the long term.
So segueing away from that slightly here, I think that's a good point that you're making, that's saying like, what, competition's healthy. I agree with that 100%. I don't, the one thing I think everybody's still concerned about though is what China, now that they obviously are going to have more influence over some of these countries like Japan and South Korea, who are really more westernized versions of the Asian circles. And of course, Vietnam has become an increasing, place of sourcing for a lot of shippers. Now it's essentially kind of mixing the pot together a little bit. So it's not necessarily like, oh, we'll show you China and go to Vietnam. It's we're going to, maybe we are still getting the same product just from a different, bank, really, like this different currency going on over there. Well, time will tell. But in the near term, so I wrote a Chart of the Week article this week.
Did you?
I did. I write one every week. And it was based on imports coming in through the ports of Los Angeles and Long Beach, and I combined that with our rail volumes leaving Los Angeles, loaded rail volumes, as well as our OTVI, which is our trucking tenders. And, it looked to me like customs imports, these are just shipments that are clearing customs, hitting the port of Los Angeles, had been on a steady decline. And it was hard for me to discern exactly what was causing that decline. Is it reduced demand from shippers? Is it something else? It looks like to me it's reduced demand because it's a very smooth trend line down. Now it's still outperforming year over year. If you looked at 2019, 2018, imports are still blowing up. Like we're still exceeding last year's levels by a good clip. It's just coming back down to earth a little bit.
Gotcha.
The thing that I noticed was that we did not see the same trend line down from either rail or trucking. Now, a few days later, of course, rail volumes start to come down. And again, a lot of that was the international container volumes, the 20s and the 40s, a lot of that. But I think a lot of that trend line down has to do with these bottlenecks. Now, they're not just bottlenecks hitting China like we talked about with the containers. It's not just that, but it's also the fact that the ports are so heavily congested. And this is something that I was talking to Greg Miller about earlier as well. The ports are so heavily congested that they cannot get these containers through customs. They're basically ships sitting out in the water and anchored. So to me, this is a sign that we could see even more of a peak season. Because once those ships start coming in out of the docks, and then we have all this freight sitting in China, of course, if that freight never hits a boat, like they just destroy it. I mean, there's all sorts of things that could happen if the economy really trails off. But all our stuff we're ordering for Christmas, Amazon Prime, it can't get in fast enough.
Yeah.
So this to me is a signal that we are going to have an extended peak season coming up, because there's still a ton of freight that has to move. And I think the difference between this year and, previous years, this is an e-commerce driven Christmas.
Yeah.
So what's the difference between when you're going out on Black Friday now, or, in years past, versus Black Friday this year?
Yeah. Last year, or years past, you go in, it's going to be that one day all out blitz.
Because there's sales.
There's sales. Now this year, it's like, Black Friday level sales started now throughout the month. Come get it. Welcome to this mattress store. Why are there so many mattress stores? I don't understand. Who is buying this many mattresses? And it seems like there's so many. I'm sorry to just divert on
Sleep is important to a lot of people, Anthony.
There are so many mattress stores.
You literally are good if you get like 3 or 4 hours of sleep.
It's inefficient.
It's like you with the food.
Yeah, you don't need it.
Most people like food and sleep.
You don't need it. It's overrated.
My goodness.
I'm sorry for divert. I'm just suspicious of so many mattress stores. If someone's out there in the mattress business, let me know why there's so many in high real estate areas, like in New York, Times Square. Why is there like a Sealy's on one end of the street and I'm sorry. I'm not going to get. I just want to know, but I
digress.
There is a significant difference in retail season in the past and retail season looking at now. And speaking of which, you mentioned spikes and how there might be an elongated spike. Another thing that's spiking, those COVID cases.
Yeah.
And with that, certain areas are starting to shut down again. We're starting to see rollbacks from areas that were moderately opening up and kind of easing back into life as we know it. But thing is, now I think we're going to see a lot more pull forward, and especially grocery stores, because a lot of, I think, outlets are anticipating another rush to the grocery store, another rush to certain department
Well, they're already
stores.
talking about it in certain parts of the country.
Yeah.
The big cities, obviously. But I think the point being here, even if you are buying a mattress, this time of year, you're actually, instead of going to the mattress store,
You go online.
You got your e-commerce fulfillment, your final mile.
Get a bed in a box.
Check out Freightonomics in the future, where we do dissect the final mile, upcoming little teaser for the future, and how that has become an increasing, factor in repositioning or global supply chains, and supply chain management has been a huge issue here over the last several months. But so instead of going to the store, everything comes out, everybody starts shopping the day after Thanksgiving. This year, people are still shopping the day after Thanksgiving because everybody's still going to wait till the last minute. But there's been so many sales and so many promotions before Thanksgiving this year. As you mentioned, Prime Day. We're going to see, instead of a peak, I think, just like we're seeing right now, we're seeing an elongated hill.
Yeah.
It's a mountain, really. It's still a mountain, but it's an elongated mountain, and it's going to last further and longer into 2021, as we still see demand, because when you order online, you're okay with it coming a few days later.
I want it the same day. Yeah, I'm okay with it. I'm okay with it.
But when you're ordering online,
I'm okay with it, yeah.
But when you're going to a store, it has to be there.
Yeah, I'm upset if I'm like, hey, where's my Fitbit? I want the Fitbit Versa 2 or a Charge whatever. Where is it at?
Yeah, and there was a Bloomberg out that basically covers this and says, here's the difference. So just like if you're, in the store and you don't see that item on the store shelf, you move on and you go to something else.
Yeah.
The problem with e-commerce is if you don't reliably have the item that consumers are looking for, 50% of them will not return. So
yeah, they're going to find it somewhere else too.
That's a long-term thing, whereas a lot of these brick and mortars had some pretty strong loyalty.
Yeah.
You'd go to Macy's, you know what you're getting at You're getting your Tommy Hilfiger figure.
Rewards card, and they get you in the ecosystem. Now you're incentivized.
E-commerce, man. Obviously, Amazon has a lot of availability, but they control what the consumer sees, and the retailers obviously have to have an agreement with them, which they've come under some criticism for in the past. But at the same time, they're providing the marketplace. They're the big box store for the e-commerce world, essentially. And so when this, if you don't see what you need online, you move on to the next spot. If you're not Amazon, they're moving on to the next store.
Yeah, yeah.
Like they got options.
Yeah, and Amazon definitely will have like sometimes I'll go on Amazon and I'm like, oh, I want X item, and X item might be out, but Amazon's like, hey, something similar right here.
Yep.
I'm like, you got me again.
Yep.
And it without fail, I'm like, oh, you keep me in the ecosystem. I'm here, and there's so many just substitutes within certain different product lines, and so that's another big, I think, advantage for certain e-commerce like Amazon. But we're looking at, I was interested to see because today we had retail sales.
Thank you. It's like you read my mind.
Yes. We had retail sales get updated today. And we saw that there also on a month-to-month basis, it grew 0.3%, which may not sound like a lot, and it is slowing. It's slowing pretty noticeably.
Okay.
And I think that's one of the things that we touched on not too long ago, that it's going to probably slow pretty much throughout the remainder of the year, but it's still 8.5% above the year-ago level.
Yeah.
So on a year-over-year basis, retail sales is very robust. Different segments, of course, are going to stay strong. So non-store retail sales, those e-commerce players, they're going to remain robust. They're going to remain strong throughout the year into 2021.
What about my restaurants?
Restaurants they didn't do too well in this most recent report.
No, I wouldn't expect they would.
They didn't do too well, and they're probably going to struggle with, of course, colder weather and increasing COVID cases, really limiting the amount of activity and foot traffic coming in and coming through. Right. So that's going to be a big hindrance for a few sectors. But I think, just as we mentioned early on in the pandemic, there's going to be some segments that are thriving and some that aren't doing too hot. One of those segments, of course, e-commerce, non-store retailers, building products, materials, been doing decently, of course, as always throughout the pandemic, those individuals working on those new house projects and things like that. But
right here.
Yeah, definitely a mixed bag, but we are starting to see some slower growth.
Yeah. So we also did we have some industrial numbers come out? This has been, we kind of use our tender rejections also from the van side. We use that as kind of our regular general freight, CPG, things like that. Reefer is obviously your food, and some hazmat, industrial supply type thing. But flatbed is typically our industrial sector. They're heavily tied to oil, automotive, lumber, obviously a big thing too. And they have just, the flatbed rejection rates have not come back. They started to show signs of growth and then they fell back off again.
Yeah. So on the industrial side, we are seeing some momentum building. So we saw a 1.1% growth for industrial production. But on a year-over-year basis, this is still down 5.3%. So
still not there.
Yeah, and the comps are not going to get too much easier when we're looking at year-over-year growth as we close out the remainder of the year. But we are starting to see some momentum build. And I'll admit, when I'm surprised or wrong in some forecasts, I'll do that. This was stronger than I anticipated. And it was also stronger than I anticipated for the ISM PMI, the Purchasing Managers Index, which had a robust jump in the new orders component. I think it was 7-point-something percentage points in the new orders. So that signals that there is going to be some production down the line. Non-defense capital goods new orders, which is a good measurement for business-to-business activity for capital goods. Showing that it's on the rebound. It's not quite at year-ago levels, but it's on the up and up. So there is some momentum building. So maybe some optimism can be built for the industrial sector slowly but surely as we enter 2021.
Trying to polish that, aren't you? Trying to make everybody feel better.
We'll see.
Industrial obviously hasn't come back yet. They're still working on it. But yeah, the freight market doesn't need it, apparently. Not right now. Can you imagine if the industrial sector was humming along with this retail consumption?
Definitely going to be interesting to see if we get that second stimulus package come January, because that will light another fire, I think, under certain consumers.
We will definitely be keeping that one updated because the benefits are set to expire January 1st, which has been supplementing a lot of people's income. But real fast, Anthony, while we're closing out the show, do you have your Christmas decorations up?
No, I don't do Christmas decorations.
So you wouldn't put them up even after Thanksgiving?
No.
You don't put up Christmas decorations?
No.
It makes sense. It actually makes sense.
I have a year-round apartment. It's going to look the same throughout the year.
How early is too early for Christmas decorations?
How early is too early?
When you're driving around, are you upset when you see a Christmas decoration out before Thanksgiving?
It's America. Live your life. You put it up in January 1st and keep it throughout the year if you want.
This is ridiculous. Ridiculous.
If you want to celebrate Halloween all year round, do it.
Keep Thanksgiving relevant.
Thanksgiving is relevant, and it should be. Turkey's amazing.
Food is amazing.
Turkey's amazing. I wish I might break my dietary ways for turkey. I don't know. Also, I forgot. It's been a while. I know we're closing out now. I haven't given a shout out recently to our amazing media team. Emila back there. I think we have Brandon. Is Brandon still an intern? Brandon the intern. So. No, he's not. Yeah. Look at him, Brandon, with the team. We also have Crystal. Welcome, Crystal. Yeah. And Aaron